All right, what's up, guys? Good morning. Happy hump day. Hey, Lorna, Andrew, OT from Australia, Down Under, Minion, SP, Peter, CJ, and then over on YouTube, looks like we are good on audio as well. All right, guys, well, there's no easy way to say this. The Bulls are in some trouble here. If of course they can't fight back. And they're kind of at the point here where they got to fight back really hard. So down here on the Bull score and the Bear score, for the first time since the party started back in May. For the first time since the party started, Bulls have 0 points and the Bears have 3. So that means off the daily chart, the Bulls don't have momentum, they don't have structure, they don't have stacked DMAs. They have nothing working in their favor. So one reason that's really important, you got to recognize through the signals, when do things change? The same setups and the same kind of trading that really kicks some ass back in May, June, July. Those same kinds of setups are not going to be working right now. At least not to the same degree. So I say that to say, for those of you with the scans and the indicators, keep in mind there's always going to be something solid on the scans. So you go to the bull squeeze scan, you go to the daily chart. Even in the crappiest of markets, you're probably going to find something. The names on those scan results, they'll work really well when you have the wind at your back from the overall market. You lose the wind at your back, momentum breaks, structure breaks, scoreboard shifts. Here's what happens. You'll have a name like BK that was an A+ setup. So it had everything we're looking for with the squeeze of the buy signal, a good entry. Gaps down yesterday and closes under the 50. You have a name like First Solar, and granted, First Solar still looks pretty clean. So the indicator says First Solar is still an A+ setup. Without the wind at its back, it's kind of like a Ferrari with no engine. It's pretty and it's nice to look at, but if the S&Ps don't look the same, you don't have the greatest chance of that trading higher. Names like BP, it was A+, now it's not. Zillow, still an A+ setup, but it's not going anywhere. So be mindful of that. And as far as the shift on the scoreboard, so one thing that I threw together for everyone who's doing the class this weekend, and I'm going to try to turn this into labels, but for now, threw together a bunch of time frames and color-coded the background based on the scoreboard. So obviously, visually, I think labels would be a lot easier on the eyes. But yeah, so check this out on the futures. Well, actually, just on the SPY, magenta means the Bears win the scoreboard. So now we're at the point where, with the exception of the weekly chart and the 3-day chart, the Bears have the 2-day, they have the daily, all the way down to the 2-minute. Same thing for QQQ. So momentum-wise, structure-wise, it doesn't mean every one of these time frames has a sell signal. It just means the odds do begin to favor the Bears. If you look at the small caps here, Bears have the edge on the daily chart down to the 2-minute. So like I mentioned on Monday, I think what all of this could just potentially result in would be the first pullback to the weekly 21 since we saw those squeezes fire to the upside back in May. And the template for that pullback, so to say, pretty much what we've seen here from both Apple and Microsoft. So Apple fires a weekly squeeze back in March. And for what it's worth, that's That's kind of above average as far as the size of the move, the continuation you got out of that weekly squeeze. Typically, you look for 8 to 10 weeks. This goes from March, April, May, June, July. You got your money's worth. But you get towards the tail end of that squeeze. Momentum, while it's still positive, it does begin to roll over a bit. All of that happens on the weekly chart. And then under the surface, your daily chart starts to break down. Scoreboard shifts. Momentum goes from positive to bearish. Structure begins to break. And where does that take price? Right to the weekly 21. So same thing here for Microsoft. Squeeze fired. Got a little bit cooked. You had some problems starting on your daily chart, and then boom. Reversion to the mean. So from my point of view, if the bulls can't address all these issues really quick, I think for the S&Ps 430-ish, and for the Qs 50-ish. So one way that I would like to trade this, and I think the QQQ might be the easier short. The structure is a little bit worse. So what I'm thinking here for the Qsters, September monthly expiration, 350 calls. We could potentially, 350 puts. 350 puts. We could maybe go a little closer to expiration. But what I would like to do is just buy some cheap puts, position size to the point where I'm going to accept the max loss, buy the 350 strike, with the thinking that daily squeeze gives you continuation lower into that level. So from a risk-reward standpoint, even if we go the first Friday of September, so September 1st, 350 puts are going for about $1.60. The expected move between now and then is about $13, which doesn't take you quite down to 350. But therein lies the beauty of the squeeze. So the expected move here between now and September 1st is $13, $14. What's the beauty of a squeeze? Once a squeeze fires, that can trigger a bigger than expected move. Meaning there's a pretty good chance we could get down towards that weekly 21. So that's one trade I'm looking for on the Qs, and then I think you could look for the same thing on the S&Ps. And part of what I like about the long put, because you could sell calls. You could sell calls, you could do debit spreads. What I like about the out the money put, you're going to benefit from the pump in volatility if we nail the move lower. So that is what I'm seeing, guys. Couple names here. Tesla, for example. Tesla's pretty much played out the same pattern I'm showing you in Apple and Microsoft. Weekly squeeze fired. Got a little cooked. Momentum still bullish, but on the decline. And then the daily chart gets a little bit iffy. Momentum breaks. Structure begins to break. And here we are. $3 above that weekly 21. So I think a pattern we could continue to see here. But if y'all got any questions, look at these futures. So one thing I'm seeing on the futures this morning is an hourly squeeze of the sell signal. Yeah, none of this looks good. Doesn't mean we have to fall apart. Doesn't mean the bulls can't fight the good fight. but the odds are against them for now. For the bulls, it's just not a good spot for an hourly bear squeeze. Given the fact you just broke major support on the daily chart. 4-hour sell signal, 2-hour, 1 hour, 15-minute, 5-minute. Nasty. Nasty, nasty. But all right, y'all, that's my focus pretty much. And like I mentioned, take what we see from the indices. All right, this is where it has to start. So for those of y'all with the indicators, don't start your morning by just simply running over here to the scans. You're always going to find something solid. You're not going to have the same success rate with that A+ setup when the market's kind of shaping up for the opposite move. If anything, you're looking towards the bear scans. So you're getting names like McDonald's. You've got names like AMD. At the moment, those are A+ setups that are in alignment with the things that we're seeing from the indices. So start here, then you start your scans. If everything in the indicators points towards lower in the market, and you want a day trade, then you go to the bear scans, you do the 15-minute, the 5-minute, the 30. The hourly, whatever your flavor of choice. But before I get going through the chat here, guys, and doing a little bit of Q&A, I am looking for some feedback. So let me get y'all the link for tomorrow night's webinar. But I kind of want y'all to decide my fate here. So let me see, link for tomorrow night's Big 3 Squeezola webinar. All right, let me put that on YouTube. But yeah, so here's where I'm looking for some feedback. So part of the indicator bundled part of the strategy class on Saturday is access to the mastery group. And well, we've got a few exciting things coming up in the mastery, all of which I think are going to start taking place in September. But one thing I'm thinking in addition to all of that, which I can't speak too much on for now, is doing some sort of small account challenge. I did the 2,500 to 25,000. I mean, basically, it was a weekly squeeze. So I have to mention that every time I talk about that small account. Like, just literally the perfect timing. I started my small account challenge right there. Squeeze fire is long. It's like a match made in heaven. So who knows? And we'll have another moment in time like that. Big part of the equation. But yeah, so nonetheless, what I'm thinking is in the mastery, kind of start over and do a small account challenge together. So in tonight's webinar, we're going to do a poll as far as what kind of challenge should we do? 2,500 to 25,000, 10,000 to 100,000. We'll give y'all a couple different options, and then whatever the majority vote is, that'll be what we do. And all we're doing is just trading the green labels and the red labels. Simple as that. We get short, we need one of those bad boys. We don't have one of those bad boys, we ain't getting short. If we are getting long, we need one of these fellas. A green A+ setup. But more importantly, we take the pretty colors in the direction of Mamacita market. I think we got the Fed announcement today. So we'll see what's up with that. But not a great look going into the open. The NQ has the hourly squeeze too. Double dose of hourly squeezes. But all right, guys, throw a few names at me here. Mark, let me see. IEGL. Okay, I get what you're asking. So, yeah, good question. So what the A plus setup tells us is just three things. We have an active squeeze, we have the active buy signal, and the stock is trading at the buy zone. Now, the ones you want to tend to focus on are the ones that are a full 5 out of 5. So an example, I don't have any examples of a 5 out of 5 right now. I think AMD, but AMD for the bears. So that tells us you have a squeeze with an active sell signal at the sell zone. But then this label tells us all the other ingredients, they're firing on all cylinders. So where that's helpful is if we take an A plus setup, and then during the trade, that begins to shift a bit. Like we still have the squeeze, we still have the sell signal, we still have those three criteria. But then there's a few underlying things changing under the surface. That can be a nice heads up. So going back to the previous example, what was that? It was GL. Right. So what this would tell me is, hey, you've got those three ingredients: the squeeze, the buy signal at the buy zone. But there might be a few underlying things here that are starting to shift. So if that came up in my scans today, probably going to avoid that one for now and try to go for a 5 out of 5. Brandon, CNI. So the reason that CNI is not an A plus setup, because we have the squeeze, we still have the sell signal, but we're a little bit too late here for a good entry. So now the label can no longer be read. We have a squeeze, we have a sell signal, but we're not at the entry zone. So the only way I can try to take that moment in time and trade it lower is if I can do that in a fashion where we're going to work a good risk versus reward. That happens if you can take your entry right under that daily 21. Further and further and further you get, doesn't mean the squeeze won't fire short. Just means at this point there's a little bit less reward. And if the exit's a move back above the 21 EMA, there's a lot more risk. I think we've talked about it a few times in here, where you want to measure your risk versus reward in terms of average true range moves. So where I'm trying to take my entries is inside that +1 and -1, those dark gray Keltner channels. So if you can catch this on a bounce, I mean, you've got everything you're looking for, right? Everything you're looking for. Sell signals on every single time frame. So this thing's just a ticking time bomb right now. You have a lot of squeezes setting up. 4 hour, the daily, the 2-day, the 3-day, and the weekly. So there's 1, 2, 3, 4, 5 squeezes, all printing a sell signal. Question is, can you get a good entry on any of them? So yeah, if you can catch that on a bounce, I think a great looking short. I think we were talking about this one a couple days ago when it came up in the scans. Danny, Cisco. Earnings tonight after the close. So as we know, earnings can always rain on the parade of a good setup, but it's a great setup. Right, I've got my squeeze with my buy signal with a good entry, and everything under the surface, or all the underlying criteria, it's firing on all cylinders for the bulls. Then we got to figure out what happens after earnings. But daily squeeze looks good, and then you got that green bean on the 4-hour. I like it. So we'll see what's up here tonight. So, John, for Google and Amazon, they're the best in show for now. And it's not even close. In terms of your FANG stocks, so, Apple, Microsoft, I guess you throw Netflix in there, throw Tesla in there. Yeah, these guys, they still hold really good structure. Right now, the only reason that Google's not an A+ setup, we have the buy signal. It's trading in the buy zone, but we don't have the squeeze. So the scoreboard says you're pretty much close to perfect. So that tells me, hey, don't short Google. Don't pick on the 6'6" kid on the playground. And then it's the same here for Amazon. Bulls have 4 points, the Bears have 0. Now, with that being said, it's a probabilities game. Based on the good momentum, based on the good structure, if the QQQ turn the corner and rally back towards the highs, these should be the first two names to lead the way. Structure supports them trading higher. Momentum supports them trading higher. But more importantly, does the market, does the QQQ support them trading higher? So I would think they would lead the way if the Qs do turn around. If the Qs trade sideways, could Google and Apple, or Google and Amazon rather, could they still rally? They could. It's just going to be a lot harder. If the Qs pull back to the weekly 21, could Amazon and Google theoretically still rally? Kinda, sort of. But it's just not a great probabilities game. So to me, that means I'm not going to short these. I'm going to respect the buy signal, but I'm going to be careful getting long anything right now, regardless of squeezes or signals or any of that. I don't have what I had behind me in May, June, July. In some ways, right now, I have a bit more of the opposite. But they do hold up good for now. Jay wants to look at Mara in Riot. Yeah, for now, Mara looks kind of cooked. Sell signals on the 4-hour down to the 5-minute. So here's another example of first you lose momentum. At that point, the structure is still fine, though, right? We pulled back to the buy zone. We have stacked DMAs. So what makes that daily squeeze different than that daily squeeze? Momentum supported that daily squeeze firing to the upside. Momentum did not support that squeeze firing long this time around. So eventually that divergence catches up to the price. So if you look at, say, Riot as well, same thing for Riot. And I don't think it's a Riot thing, a Mara thing, a Bitcoin thing. It's just what we're seeing in all the momentum stocks. So out of curiosity, You get this about another dollar lower, then Riot will have played out the same pattern as Amazon and Microsoft. Weekly squeeze fired long. Weekly squeeze got tired. Daily momentum shifted. Daily structure shifted. And here we are. Now, for what it's worth, for a lot of names out here, the weekly charts are still bullish. If that's a 30-minute chart that I'm looking at, the only thing I'm thinking is trying to buy that pullback or buy the next squeeze at that 21 EMA. I can't look at that time frame as bearish. I can't look at the QQQ on the weekly chart and say, man, that thing's a disaster. 5-minute, 15-minute, monthly chart. Squeeze fires, prints a buy signal. I want to try to buy that first pullback. If, of course, the indicators allow for it. So you got to see it from both perspectives where, yeah, in the short term, things aren't the best. What that action in the short term might do is just give you that pullback to your weekly 21. This thing keeps on spitting out a weekly buy signal. That might be a great buying opportunity. So for Riot, Mara, the Qs, the S&Ps, it's kind of the same pattern right now. Yep, Larry, the webinar tonight. Yeah, John, so good question. A difference between the first webinar and tonight's webinar. The first webinar was more of an introduction of the indicators. Big three squeeze, the labels, etc. That part of the equation is going to be more brief tonight. At this point, most people have seen it. A lot of people have it. So just kind of cover all the pretty colors real quick. And then just more so make it an actionable webinar. I mean, based on a few things we're seeing this morning in the signals, I think there's a chance that there's a few nice shorts lining up. So tonight's more of a quick, hey, here's the indicator, here's how it works. Now let me show you how I use it in the context of the trades that I'm currently looking for. And then as a bonus, before I start the webinar, I'm going to run the scans for every time frame. Weekly charts all the way down to the 5-minute. And I'll do that for the bull squeezes and the bear squeezes. And if you don't have the scans, I'll throw those all onto a spreadsheet. And then I'll send you home with the spreadsheet. So then you can take your favorite time frame, look for a few longs, look for a few shorts, whatever tickles your fancy. Whatever gets you fancy tickled. So Larry, the moving averages that I use, the white one is a 21 period EMA. So 21 period exponential. Blue moving average is the 50 SMA, 50 simple. And then the red moving average is the 200 SMA. $21, $50, $200. Yeah, John, that's my rule right now. Actually, let me reword that. It's not my rule. It's the indicator's rule. At this point, guys, I'm pretty useless. Okay. I'm not thinking. I'm not trying to have opinions. I realized how much money that cost me. What's the indicator telling me to do? May, June, July, I've got buy signals. I've got the bulls taking the scoreboard. Bears got nothing to stand on. Would have been pretty dumb to try to short the market May, June, July. Got to listen to the pretty colors. Right, so all of the things here are telling us we got to chill out to the upside. Momentum, no longer supportive of those trades working. Structure now, kind of at the point where that's kind of cooked. Lower time frame signals. can't fight that. You fight that, you're going to take the same setups, the same trades that worked like a charm back here, and you're going to get back all those profits. All right, for me, that was the typical boom and bust kind of cycle. Make a bunch of money, don't know when to take my foot off the gas, and then just give it back. So y'all in the mastery know we stopped getting long the day that we took off our ADI trade. We stopped getting long on, what was that day? The 3rd of August. Let's see, S&P is the 3rd of August. And again, I'm trying to stress, not because I forecasted what's going to happen, just things changed. Momentum shifted, scoreboard shifted. Kind of ignorant at that point to keep trading the market in the same fashion. And personally, I haven't seen a single name work to the upside since the market shifted for the bears. Now, the difficulty last few weeks is we're just kind of stuck, frankly. So longs aren't working, but, swings on the short side, they might not work as well. Now that we're breaking the 50, that might open up the door for some nice swing trades. Chili's. Someone's got to do it, right? Let's see. General Electric. It has most things we're looking for, but not all of them. So what's missing right now is a buy signal. We have the squeeze. We're at the entry zone. We need that buy signal. Why don't we have a buy signal? In this case, momentum's below 0. Right now, that's a 1 point for the bears. The bulls have got structure. The bulls have got moving average crosses, price above the 21, price above the 50. What the bears have for now is momentum. So that's where you have to be really careful to the upside. What can happen is the same thing you're seeing or you saw in Apple. All right, Apple's a beast. Here's a brand new daily squeeze. Well, momentum broke way before that daily squeeze printed. Tries to go higher, tries to go higher, tries to go higher, and then craps the bed. I believe you saw the same thing for Microsoft. And down she goes. So be careful with those. Another example would be AI. Big daily squeeze. Here comes the big push. Notice how we never got a buy signal? Right, we never got the green arrow down here on the squeeze. It never would have been an A+ setup. Momentum never supported that squeeze firing long. So they try, and then the squeeze breaks short. Nasty stuff. Nasty stuff, I tell you. Corey, RYTM. Rhythm. You got to feel the rhythm, man. No major problems with it. It's just a little too far above that 21 EMA. But as long as you have a buy signal, you can buy it on the pullback. Good if you got it kind of thing. Good if you got it. Frank, so Meta. Where does momentum peak? Over the last 5 months. Momentum peaks back in June. Now, these things they can take some time to catch up to the price. But momentum peaked back in June, on a decline ever since. Meanwhile, price goes on to make a high, another high, another high, another high. It's not sustainable. They can yank momentum back above the zero line, but if they can't keep it there, eventually that can catch up to the price. So Meta faces the same issue a lot of things face right now. You have no issues on your weekly chart, other than the fact that you haven't pulled back to the weekly 20 since December of last year. We can't look at the weekly chart and say, hey, Meta's in an uptrend. By definition, an uptrend means you're making a series of higher highs and higher lows. All we can say here is, hey, Meta shot out of a cannon. Weekly momentum still positive, but on the decline. And now you've got problems on your lower time frames. So what can that do? Trigger that weekly reversion to the mean. Okay, so real keel. Good question. So the squeeze is a compression thing. Right, so you're looking for Keltner channels inside of the Bollinger Bands. All right, that's your contraction. Everything's tightened up to the point where now the Keltner channels, they're inside the Bollinger Bands. And I might have that backwards, but with that being said, when the squeeze officially fires, that means the Keltner channels have moved outside of the Bollinger Bands. So until that happens, the squeeze can't fire. As long as those Keltner channels are inside those Bollinger Bands, or vice versa, you're in that compression phase. So if we were to throw, let me see. Well, I'm going to throw them on the chart, but that's what you're looking for. So Claudia, we know if the squeeze fired when we get the gray dot. So McDonald's on the daily squeeze still hasn't fired. The indicator is still printing the blue dots. So McDonald's has been printing a daily squeeze since early July. We'll know the squeeze fired when the blue dot turns into a gray dot. So back here, Solar Edge is in a daily squeeze. We have the blue dot and the red arrow. So the red arrow says, hey, not only is this stock in a squeeze, it's also printing one of your sell signals. So that squeeze should fire short. And then the first gray dot tells us, hey, the squeeze is officially fired short. So you've gone from compression, you're building up energy, and now you're finally releasing that energy. And our goal here, guys, is to get our trades on, buy our calls, buy our puts, before the squeeze fires. That's one thing I don't like about the typical teaching of the squeeze. Wait till the squeeze fires and then get short. Well, that has you getting short Solar Edge right here. You're a little too late. If I can get short inside the squeeze back here, hey, by the time the squeeze officially fires, it's time for me to cash out. Take full profits or take some partials. Take some partials. Yeah, real keel. Good question. So what I've noticed is with the Keltner channels on my chart, once price starts to drop outside of those Keltner channels, typically the squeeze is just about ready to fire. If we're trading inside these Keltner channels, it's not going to fire. And so they tried to fire it. They tried pushing through that top Keltner channel, and it came right back in. Where, again, going back to Solar Edge, you're squeezing, price finally breaks under that Keltner channel, and then shortly after the squeeze officially fired. Yeah, John, always looking for an entry to the 21 EMA. At the 21 EMA, rather. Yep. I want an entry at the 21 EMA, but then the 21 EMA, I think, also offers context. If price is too far from the 21 EMA, if price is too far below the 21 EMA, that's where we start to look for those reversion to the mean trades. Which, again, is kind of what I think is setting up here for the weekly chart. The 21 EMA is pretty much like home base. Every now and then you got to come back home and check on the roost. So when price hasn't touched the weekly 21 in May, June, July, August, you're going on 4 months. Sometime soon that pullback should be around the corner. But all right, my friends, I got to let you go here. I got a haircut in 20 minutes. Got to make sure I look fresh for the webinar tonight. But as always, thank you for all your time this morning. Thank you for all the questions. Wish you all the best of luck today, and I will talk to you all soon. Adios.